With the recent drop in the stock market and the S&P 500, a lot of companies have been dropping down. One of them being Uber Technologies, which is down 6% in the past month, which is about $5.31. So let's go ahead and take a look at the numbers. Let's find out what its intrinsic value is and maybe see if this stock is a good opportunity to add to our portfolios. Now, before we take a look at Uber's financials, let's go ahead and see what Wall Street is saying about this company. And let's also see their last earnings report and see how well they reported. They have a total of 55 analysts in the last 90 days with a buy rating of 4.43 out of 5. That means that 35 strong buys, 9 buys, 11 holds, 0 sells, and 0 strong sells. So analysts are pretty bullish on this company. And in the last quarter earnings of November 4th, they beat both on EPS and revenue, so a double beat, which is no surprise that a super investor like Bill Ackman, they have a position in Google, which is about 20% of their portfolio as of 2025. Now, if we take a quick look at a fundamental analysis, if you've been following the channel, you know that I love to see companies when the share price starts dropping after the EPS starts increasing. As you can see, usually the share price follows the EPS. When Uber had negative EPS, of course, the share price was dropping. And then as soon as it went positive, of course, the share price went up. But in an example like this one, the EPS keep growing and growing and growing. As you can see, they just reported great earnings and the stock for some reason is dropping. Now, this is a divergence. That means the company is still growing in sales, revenue, whatever it is. But for some reason, the share price is still dropping, which makes me think that this can be a good opportunity to start investing in a company like this if this is something that you wanted to invest in. Now, overall, technology stocks have been expensive in the year, except around April 4th. But now I think, especially earlier this month when we had a little bit of a stock market drop, we had a few opportunities. I did deploy some cash, but if we take a look at Uber's financial, we can see the revenue is still up. Operating income is turning positive. Same for net income. Pretty much every single metric for the company is going from red to positive. Now, Uber does have more assets than liabilities, about 63.3 billion in assets, only 35.2 billion in liabilities. And if we take a look at their free cash flow, it's currently sitting at 17% with a conversion rate of 52%. And again, if we take a look at more metrics, by the way, guys, if you want to find metrics like this, the link is in the description below of this website. You can go ahead and click it. It'll take you to this. You just plug in a company and it'll show you all the metrics. But as you can see, gross margin over 34%, decent mode, and everything else is starting to go from red to green, which is good when you want to see a company, especially like Uber, that is growing. And especially now that there's going to be a lot of self-driving cars and stuff like that, I think Uber's margins are going to increase a lot more. Now, this isn't the intrinsic value we're going to be taking a look at. This is just what analysts are predicting for this stock. As you can see, the lower forecast is about $82 with an average of 112 and a high forecast of 157. Now, Uber does not have a dividend yield, which I don't mind. This is a technology company. It's a growth company. However, they do have a 1.16% buyback yield. Now, this is very interesting because usually when companies start buying back their own shares, most of the time they believe they're going to do well in the future. So it's a good sign for me to see as an investor. If I wanted to add this in my portfolio, it gives me a little bit more confidence that the management team at Google is buying back their shares and they're also buying back their debt. Usually this means that they have a lot of cash if they're doing both of these things, or at least they're using their cash doing something good for the company. Now, if we take a quick look at this 5-year chart comparing the revenue with the PE ratio, as you can see for the past 5 years, the PE ratio has never been below the revenue. The revenue is the blue line, PE ratio is the green line. And for the first time in 5 years, we have a PE ratio below revenue. Again, to me, this is a good sign as an investor. That means I might not be overpaying for the company. And if we just take a look at Uber, the current PE ratio is sitting at 10 for a technology company. I think it's a little bit ridiculous. And they have a market cap of 173 billion. Now, do keep in mind they have a 52-week low of 59.33, so the stock can still be go down, and they have a 52-week high of $101.99. However, if we take a look at the overall history of the company, they are up 101%, which is about $42, and we're definitely starting to see some pullback after all this growth. Now, if we take a quick look at the annual revenue estimate, as you can see, between 2025 and December of 2026, they're going to be increasing in revenue. And also take a look at this in terms of the forward PE. The company is going to be more expensive as time goes by. Usually this means they're going to be having better numbers. Again, this is just an estimate. This doesn't mean it's actually going to happen. This is what analysts are expecting. And now what you've all been waiting for is time to see the intrinsic value for Uber. As you can see, on a base case, the company is still overvalued by 3%, meaning the company is worth $81.06. The worst case scenario for this company is that it's overvalued by 29%, meaning the company is only worth about $59.35. And the best case scenario for Uber is that the company is worth about $132.52, meaning it's still undervalued by 37%. Now, if we take a look at this chart, the green line here is usually the intrinsic value for Uber. And as you can see, most of the times it's far off from the intrinsic value, and now it's finally starting to get to that point. Is this a good time to start opening a position on Uber. I'm not a financial analyst, guys, but I am going to buy some shares as soon as the market opens. I'm recording this video at 8:13 a.m. I'm not telling you to buy it, but I think actually I'm just going to buy one share and see what happens. If I start feeling good, if I get the good vibes, I'm going to invest more, but I don't know yet. I have to do a lot more research for the company, but I think at this valuation, due to how the current market is, I think it's not a terrible idea to maybe open a position. Again, I'm not a financial analyst. Do your own research. And if you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.